Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast. Thank you as always for joining. Today, I guess before we get into today's episode, I want to give a very special shout out to someone very special. And that special someone is you, right? We just surpassed our all-time highs in monthly downloads, and we did it in the month of February, which is a shortened month. So hats off to you guys for just sharing, supporting the show, and of course, generating topics that people want to hear about, right? Today's episode is going to be a little bit different. It's going to be a special episode as I'm going to share an interview or a session that I did with my buddy Alex from the Be the Trader podcast. Alex recently ran a contest where the contest winner won a session with Alex and myself to talk trading. So in this interview, we're going to talk, or not even interview, this discussion, we're going to talk Forex, we're going to talk stocks, we're going to talk some of the common struggles that many new traders are going through, as this trader's only about a year into his journey. So I think you're going to love it. Now, before this episode ends, I want you to do a few things. First of all, check out Alex's podcast. Again, it's called Be the Trader, the letter B, and then the Trader. And of course, make sure you continue to support the Trading Coach podcast by liking it, by sharing it, and leaving me a rating and review on iTunes or whatever other podcasting app you're listening to it on. All right. Hope you guys enjoy. And here we go.
Thanks everybody for joining us today on Be the Trader. Today I have a very special episode and special guest joining us. Today I have Akil Stokes, who's, as you probably heard in previous episodes, a Forex teacher / coach and mentor, and also a track coach, which is pretty awesome. Pretty awesome. It shows that you can do multiple things when you're a trader. And not only that, but I also ran a contest here recently on Twitter, and Noah Mayer won that contest where he's joining us on the show, a listener, bringing him on the show. I told you guys I wanted to do some things differently. I wanted to bring new people on the show. And Noah, thanks, man, for participating. I really appreciate you listening. And welcome to the show, man.
Man, thank you for having me. This is exciting.
Absolutely.
I really appreciate it.
Absolutely. So let's get this thing started. We want to be here to help you in any way you can. You mentioned right before we started the show that you've been doing this for what, about a year and a half?
Yeah, about a year, 3 months, I think it is right now.
What got you interested in this world that we're in right now?
So when it's come to stocks, I've always had an interest in stocks. It kind of came from a class I took in high school where the teacher was like, hey, I'm going to give you all $5,000 of fake money, and whoever has the most capital by the end of the class or the end of the semester, wins a prize or something like that. I ended up not winning because I didn't really know what I was doing, to be honest. I just invested in a bunch of large cap stocks and was like, okay. And the guy next to me was kicking my ass. He was buying and selling, but he didn't know what he was doing. He was just getting lucky. So that kind of sparked my interest to learn even more. And just throughout the rest of my high school career, really just kind of keeping that interest in stocks. And then when I got to college, I ended up finding Tim Sykes my sophomore year. Yep. Seeing his videos, that's usually how people get started. And as soon as I found him, I was kind of looking for something else to do, because what I'm doing with my college degree right now, I'm not really sure if that's what I want to do when I graduate. But since finding stocks, man, like the past year and 3 months has been amazing, because I've just been so dedicated to it, just showing up every day, because it's just, I found a passion for it. And I feel like that's what so many people find, is that passion for stocks, and that's it.
That's awesome. That's awesome. It's interesting. You said what did you say? My career in, did you say career in high school? Is that what you said a second ago?
I think
my high school career. I was like, high school. It's all good. That's awesome, man. It sounds like you got a real passion behind this. And I'm curious on what you mentioned before is, what are you focused on when you found stocks? Like, what are you focused on? Are you focused on small caps, mid caps? Where are you at?
When I first started focusing on stocks,
or even now?
Oh, now I'm focused on small caps, penny stocks. I have a smaller account, so really stocks below $10, below $5, stuff like that.
That's Akil's favorite.
Oh yeah. Oh yeah.
That's awesome.
I thought, yeah, when I first got started and wasn't really satisfied with the returns I was making, I went into that world as well. But of course I went into with no education, just thinking like it would be the same thing as the large caps, and learned, had a few good trades, but more so to not learn some very valuable lessons about kind of messing with stuff I knew nothing about. But it's funny you mentioned that. I had the same experience. I don't know if it was high school. I had a really good elementary school teacher, probably one of the only teachers I remember. But we did the same thing. I had no idea what investment was, but it was kind of the same concept as he was like, it was like a six week thing where he gave us some money and said, invest it and see what happens. That was kind of my first time just understanding that like stocks and investments actually existed. And I think like you, I think I blew my account up just not knowing what I was doing. But that was probably my first experience with, aside from like bank accounts, with like just understanding that there was a market. So it's cool to have more teachers need to do that, in my opinion. But that's good. That's good.
I feel like you guys had the better way. Y'all did it with fake money first, and
Yeah.
I actually blew up a real account when I first. When I first got into trading, I was like, oh, let me just do this. So it's awesome that you have a passion behind it and you started. It's interesting you had that experience, because I hear a lot of people have that same story where they went to school and that's where they got that. I didn't see that in my school, but that's cool, man. So tell me, just curious, like into the small cap land, you have any questions? Because that's what I trade. I trade small caps as my main priority.
Okay.
I'm a short bias trader. And I know Akil is more in the Forex, but in terms of like questions of philosophy, any challenges you're dealing with, I mean, it pretty much all is the same thing. So
really kind of what I'm looking for right now, kind of struggling with, is like, for both of you, when it comes to like your criteria for trading, what is everything that you take into account when you're looking for a short or looking for anything in Forex?
sure. You want me to go first, Akil?
Yeah, go ahead.
Okay. So for me, what I typically do is I'll just pick one example. So there's one short strategy that I love to do, and that's anything. My first criteria is, number one, is it has to be gapping up over 50%. That's something
Okay.
that I have to see, because I found over the couple of years that I've been tracking this strategy that it wins around, I would say, 65 to 70% of the time. That's the first criteria. The second criteria that I look for is, what is the actual price action doing? Like if the price action is just slowly grinding and it's like building bases then grinding, the little stair steps, then I might not want to short this one right on the way, because there's a lot of strength. And then there may be a catalyst too. So I'm trying to find out, is there a catalyst behind this move? If there's a catalyst behind the move, that's something like a partnership with McDonald's, Walmart, like some big name, there could be a possibility that this is not for me, right? And if it is for me, then that at least tells me that maybe I'll take a fourth risk rather than a full risk, because it could still work. The pattern could still play out. The strategy could still play out, but it may not play out in the same time period, the same time length. It could play out for a short little drop, and then I got to, take my profits. So that adjusts what I'm going to do, like mentally, and how I'm going to play it when the action starts. And then I don't trade pre-market. So I'm just watching a pre-market. I see if there's a catalyst, see if it's gapping up. I see what the price action is doing. If the price action is doing the opposite of what I mentioned, and it's like kind of like it spiked huge pre-market and then it's just fading the other way, I love that. Like that's a better sign, because we're seeing weakness. It can't even hold its spike. And if it has good volume, if it has a volume over 100,000, 200,000 pre-market, to me, that's key, because most volume pre-market is just crap. And if it has over 200,000 volume, then I'm like, okay, there's eyes on this ticker. And then the other criteria is when it opens. When it opens up, before it opens, I already have a plan. I already have a plan of key technical levels of, okay, if it reaches this level, how does it act here? And if it looks like it's getting weak on the tape and the price action, obviously, then at that point, I'm going to start entering that short position. However, there's sometimes where it does not get to that level, so I have a plan B also written down, where that is something that, let's say VWAP. I like VWAP on this strategy. Is the only strategy I use VWAP on. And if VWAP if it looks weak and it's getting close to VWAP and is testing it, like it's going to break, then I may take a starter. And then if it breaks through, I'll add to that position. And then once it breaks completely through, then what I wait for full size is what I wait for is a test. I wait for a test back up, because it could bounce easily and just basically be a short trap. It could just squeeze shorts all the way and just skyrocket back up. And you don't want to be in the full size position, or you'll be miserable. So what I do is wait for the test. And then when it tests that VWAP, if it hovers around VWAP, but if it breaks through, I'm out. Like I'm done. Like I'm like, nope, because I've found that the more times I jump back in after that break of VWAP, even if it barely breaks, I'm wrong. So I don't care if it fakes me out or anything like that. But if it holds VWAP for just a second, 2 seconds, then I add full size. And now my risk is pretty much break even, if not a small 1 cent gain, you know, but that's not the focus. I don't care about break even or 1 cent gain or 2 cent gain or anything like that. My focus is I have a good risk and I have a good area, and I know over time this strategy works. So that's a long answer, man, but that's, I mean, it's a lot when it comes to figuring out what you want to trade. What about you, man? Akil?
Well, the key, and I'll take it from a more general perspective, is really what Alex said, and to sum that up is it's having a rules-based strategy. So the key to everything is you go into the market and you know exactly what you're looking for. Everything is rules-based. You want to take as much of the emotion out of it, right? As human beings, I used to think that I can be emotionalist, and I probably am emotionalist in many things in life. But when it comes to the market and when it comes to money and greed and fear, those are really big triggers for us. So a lot of the times we'll go into the market and we'll want to do something, and it may not be there on the chart, but we'll kind of do it anyway just because we're emotionally pulled. And, as males in general, we tend to do dumb stuff. So that doesn't help. But so a rules-based strategy is key, and it needs to be testable, verifiable, and repeatable. I mean, it needs to be something that you can test. You can ensure that it works historically, and then obviously you can repeat it in the market. And the repeatable part is very important, because I know personally I've done many strategies, especially like some lower time frame day trading strategies, where I've tested it. It works great in hindsight when the markets aren't moving and you get all the perfect entries and whatnot. But in real life, it doesn't work. So it's important that it's testable, verifiable, and repeatable. But a process I like to follow is a simple 4-step process. It's called IPDE. It stands for identify, predict, decide, execute. And again, this is pretty much what Alex said already, but you identify what's going on in the market, right? Where are your key levels, whether it's technical or what are your key fundamental elements that you're looking at. You identify kind of a bigger picture view of what's going on. Is this stock, or is this, if you're in Forex currency pair, is this at a price point or a location that I'm interested in? Based on what you identify, you can make that prediction where, based on this and this and this, I predict that stock is likely to go here, likely to go there. And the prediction part is really, it's a 2-step process, because one is you want to make a prediction on directional movement. Obviously, you also want to make a prediction on, is there enough opportunity? Sometimes you'll have an awesome setup in the best setup in the world, but there's limited opportunity. And it's like, well, is it worth the risk? Can I get the risk reward that I want in that situation? And unfortunately, sometimes you'll have the best trade in the world, but the risk reward doesn't match up. And you're like, you got to let it go, or you can get in with, maybe a partial position size. And then after the prediction part is you decide, right? Based on your prediction, you decide, is this something I can trade? Is it something I can trade full? Is it something I can put a half position on, quarter position on? Is it something I want to wait for? And then the last part is just, when the setup meets your rules of engagement. Check off every boxes. I'm looking, if this, then that, if this, then that, you click the trigger. I think if you stick to that process, and again, no matter what rules you're looking for, technical, fundamental, combination of the two, you stick to that process of identifying bigger picture. What am I seeing first with no bias? And then based off what I'm seeing, form your bias, make your predictions. Where are we likely to go if I'm right? How far can it go if I'm wrong? That's going to allow you to set up your risk management. And then you can see if this is a position that you want to be in, and then pull the trigger, decide how you want to enter it, and then pull the trigger on it.
Thanks for that, man. That's a good point. He hit on something that was huge, and that is even it could be the best setup, but is this worth the risk? Like, are you going to get your full return that you're looking for? Because, man, that's something that you need to focus on for sure. Because everyone just thinks setup,
Yep.
process, patterns, and then it's like when you do it so long, like Akil, I'm sure you could relate. Is when you do this for so long, you kind of forget all of this. You don't forget, but like, I'm obviously Akil, he's teaching every day, so he's like talks about this every day. But for me, it's so automatic now that you kind of forget, oh, this step, it's not it's super important, but it may not be important when I'm talking. So
Mm-hmm.
that's huge. Like when you talked about that risk.
Yep. And that's cool what you talked about, because it really is true. Like when you if you have a consistent routine or or a plan for trading eventually, and the key is, right, they always say this: trading is boring, right? When trading gets boring,
Yeah.
you're doing good, because at first you're all excited. Oh, this is here. I want to trade. Oh, I can do this. I can do that. You're
Yep.
excited, like being in the casino, bells and whistles. But eventually, like when you have a set system and a process, it's like my morning analysis is the worst, because it's like I come in, I'm like, all right, look at this. Are we there? No, we're not. Okay, if we do that, okay, if we come here, I'll do that. It's just monotonous, same thing every single day, no excitement. But it's profitable, and it's trading a consistent plan. So you kind of become like a machine in your own right, where you're ignoring everything else that doesn't have to deal with your plan, all the pundits out there saying this, all the people on the internet saying that. And you're just locked in. We're like, okay, look at this. Okay, look at that. Okay, look at this. Do we have this? Boom. If this, then yes. If that, then no. And you become like a machine. And that's how you don't get rid of those emotions, but they no longer affect you.
What else do you have for us, Noah? Does
I
that
was gonna
answer your
say-
question, by the way?
Yeah, it does. Thank you all very much. That answered
Sure.
a lot. It really helped me. Another thing, just kind of lead on what Akil said, is when it comes to emotions, was it just time in the market, or how did you really deal with those emotions of, like, when a stock goes up, be certain times where I'm like, I see the green and I want to exit, but then the stock proceeds to rip another dollar and I'm like, shit. Like, how do y'all deal with like those kind of emotions? And then like another one I kind of struggle with sometimes is when I see certain patterns setting up that I'm liking, there'll be certain times where I can get into the stock, and then other times where I'm just sort of like, I'm frozen almost. I'm sort of like, I want to get in, but I'm afraid it's going to drop as soon as I get in, type of emotion. How do y'all kind of deal with that?
Well, it's tough, and there's an interesting cycle. It's kind of like, imagine a triangle. It's a belief, action, result cycle, where the more belief you have in yourself and your trading plan and your system, the more likely you are to take the right actions, which is doing what you're supposed to do without emotions getting in the way. And then when you take the right actions, you start to notice that you get the right results, right? You start making profit. And then as you get more profit, you're like, okay, this works. And you believe in yourself even more. And as that gets going, you get stronger and stronger and stronger, to the point, again, where you're mechanical, where it's like, you no longer care about wins or losses. You're kind of like a casino, where, a casino doesn't really care if blackjack player A comes in and wins or not. They know that the majority of people are going to lose money. So they're just trying to get people to stay in and bet money. The difficult part is like, well, if you don't have that belief, how do you gain it to begin with? And the backtesting process, are you familiar with backtesting?
Yes.
Okay. So the backtesting process is big, because if you've ever backtested it, it's the closest you can get to like an emotional pull, because, typically you have this new shiny strategy, you want to use it in your mind. You're like, oh, it's going to be so profitable, $1 million in like 10 year or 1 year. And then you trade it, and it starts off all good, and you're like, this is awesome. And then it goes to this bad period. I'm like, oh crap. And then it gets good again. So you kind of go through those emotional pulls of seeing the ups and downs, and hopefully if it's something that works, at the end of the day, you see the ups. So that gives you a belief in your system. Like, that it works because you've done the work. But it's not the same as, again, the emotional triggers for real money. So you just have to force yourself. You got to believe in what you're doing, believe in the work you've put in, and force yourself to follow the plan. And as you follow it, when those results start coming in, you're going to believe in yourself even more. I know the game-changing trade for me was, I was part of a group that was training, and there's probably like 20 or 30 of us being coached at the same time. And we took this trade. It was like on a Thursday. It was this big trade. And, Friday came, and it was up like 50 points, like 50 pips. And, the first thing I want to do is like, okay, well, it's the weekend, crazy things happen over the weekend. In my mind, take my money. And that's what I had did historically up to that point. I take 50 pips because, 50 pips is better than zero. But my mentor would always say, he's always, let the trade play out, trust the analysis and that. So this was the first time that I'm like, okay, I'm going to show this guy. I'm going to trust this plan. I'm going to trust the analysis. I'm going to lose this 50 pips, and I'm going to send him a a sternly written email and say how he lost me money. And I remember holding it, and we came back, I think probably Monday or Tuesday, and he asked the question. He's like, well, how many of you guys cashed out on Friday? It was like more than half the group was like, yeah, me did. Even my roommate did the same thing. And then 2 days later, that thing ran up like 150 more points. And then after that, it ran up like 400 more points. And I remember yelling to my roommate, I'm like, dude, like, we did it. Like, did you get that win? And he's like, yeah. I'm like, what happened? He's like, I cashed out. But the point is, like, this was the first trade where I kind of put myself outside of that comfort zone. I wanted to do something so bad, but I forced myself not to. And fortunately, I guess it could have went either way, but fortunately this time it paid off. And for me, it was like an eye-opening experience. Like, wait a minute, like everyone else took 50. I took 200 on first contract, 400 on second contract, like all because I just did what I was supposed to do. Yep. And that kind of motivated me to, in the future, to like, hey, I believe in it a little bit more, keep doing what I'm supposed to do. And then eventually as those results start coming in, you gain more and more confidence to the point where like, you don't care. I don't even have, I wouldn't say I don't have the thought of taking profits early. I think it's normal, but it's not deep enough for me to actually do it. I know that I don't care about any individual trade, win or lose. It's about consistently doing the right action. I know that's going to give me the longer term results I want.
So for me, I'm not as experienced as Akil, so I actually still experience so what I do personally right now is I actually do a challenge for myself, which has helped me dramatically, which is the no look challenge. I talk about it on some previous episodes where I talk about, I don't upload my trades until the end of the month, and I don't look at P&L until the end of the month. And I'm telling you, for me, that has dramatically increased my system, increased my profits, my consistency, because now I had the challenge of what he was mentioning earlier, of always being worried about that last trade was this next trade is this. Like, I just lost 4 times in a row. I just won 6 times in a row. And that is gone, because like after each trade, I don't know. Granted, like we know if we're up or down, right? We know that we won, but I separate myself so much from it that I can place the next trade. And then to add to that is, if you have that hesitation, because Akil gave you the best answer, so I'm just going to add a little to that, is you might want to check your risk. Like, how much are you risking per trade? Because if you can, you should get to the point where, at least at the beginning, that you don't want any hesitation. If your system is triggered, you shouldn't have hesitation. You should be triggering it. You should be boom in. And to get to that level, you might need to be at a spot where a gain at your full, maybe 3R, 4R, whatever it is for you, doesn't even do anything. Like, it doesn't even make you happy. It doesn't make you excited. And maybe you should trade to where like you risk $10 a trade and then you win 30, because what you're trying to build is a habit. Because, dude, you're so young, man. I wish I did this when I was in college. You're so young that if you do that for 4 years in college, I'm telling you, man, even if you just did it for 4 years and you found consistency and you were consistent and you never changed that and you're only making $30 per trade, I'm telling you, as soon as you have such strong belief in your strategy that when you start increasing it, you'll just start exponentially growing. So just think about what you're risking per trade. Because if you're hesitant and you're seeing yourself more times than not missing trades because you're scared, it's because you don't trust, number one, you don't trust your plan. Number two, you don't accept your dollar risk. And if you don't accept your dollar risk, then you're going to always be in that battle.
That's brilliant. I mean, I forgot who said it, but I always remember a quote in my head that you should, your position size should be so small that wins don't really make you happy and losses don't make you sad. And that's brilliant what you said, Alex, because the fear is just because of money. That's the fear is maybe it's ego for some of us, but it's like, I don't want to lose money. That's the biggest thing. So when you put yourself at a position size where it's like, man, like I lost a little bit, but it doesn't really matter. It's, you don't care anymore. It's like losing a penny on the street where it's like, you lost a penny, but it's not that big of a deal versus like, hey, I dropped $100 bill. I got to go back and get it. So that's fantastic advice. Yeah. Fantastic.
And it's free trades now. If you're a long buy, are you long bias?
Yes, I am.
Okay, it's free trade. So you could
Yeah.
trade literally, you could do like 10 shares and still make money. It's so crazy. It's crazy the time we're in.
Yep. Yep. And forming that habit, process over outcome. Yeah. If you form the habit of doing the right thing now, like I said, money is the easy part to get. You can always add more money to your account. I mean, shoot, I get people that complain all the time. I don't have any money. Go work McDonald's real quick. Like sacrifice. I mean, I cleaned toilets for a year. Like sacrifice a year to McDonald's, work some money, right? And then put it back into your account. And if you're doing the same thing with more money, right, your result is just going to grow and grow and grow and grow, but you're not really doing anything different. So it's like there's plenty of time not to chase the money and just develop that skill. And when you start going, that payoff will come, and it'll come in a massive way because you're ready.
Noah, have you found what works for you? Like,
I'm getting there, like from, I would say 2 months ago or 3 months ago to where I'm now. I have a lot more specific criteria and a certain pattern that I'm working on. I think right now that I'm really just trying to work out the kinks of what works and what doesn't work. That's why on some trades, some are a little different than others and what I'm looking for. So sometimes I'm like, like this could be it, this couldn't be it. But that's why I'm sometimes hesitant. And then other times I'm ready to just take the shot.
how many strategies are you like focused on?
I'm focusing on just one.
Nice.
Now,
Good.
because I've heard from so many different people, from your podcast, from other
Yes.
podcasts, it's like the main thing that I've heard is focus on 1 to 2 strategies when you first start, master those strategies, and then branch out. So I've really just found something that I've noticed,
Yeah.
and then I've kind of honed in on that.
So how long have you been doing that for?
For about, I would say a month and a half.
Okay.
January was really the first month that I've really like solely focused on it.
I think you'll see that, and maybe you see it already, that you'll get to a point where once you do that, you'll start to see unique characteristics in that one. Like you'll start to pick up little key indicators that you're like, oh, like that you would not notice if you were focused on 3, 2, 4 strategies.
Mm-hmm.
And when you start to see that, that's when you'll start to kind of get a feel. That feel will start to come on where you start to be like, oh, when this happens, I can get in now here rather than here. So that's going to be fun, man. It's going to be cool that you experience that. Did anything else that comes to mind and something that you might have?
I had one more question. I just forgot it, but I was just about to ask all it. Damn, what was it? I guess I'll start with something I had earlier.
Sure.
For y'all, like when it came to learning and just figuring out the market itself, what was y'all's biggest like resource? Was it screen time? Because I've seen screen time as like a major thing that's helped me. Or was it data or just watching videos from mentors, stuff like that?
Do you want me to go first, Akil? You got it.
Oh yeah, you can go first.
So for me, it was, I don't know, man. It was a lot. It was a lot. Like it was, at first I would say, the first thing that came to my mind is because you mentioned mentors, was it screen time? I think it was everything, like the first thing that hit me when you said mentors, I said, yep, it was that. And then when you said screen time, I was like, oh, no, it was that, like,
Yeah.
So because it's all important. So like mentors, like that was key for me too, because I've experienced many different mentors. I had the ability to just pay for all types of services. So I did. And I picked things that I like from each of them. Like there was not one mentor that was like, oh, this is all me, because I learned that there's things I didn't like and things I did like. And then the screen time was huge, because screen time, that's when you build that confidence, because you can see things happening. You can see it in real time. You can practice in real time. And I would say it's just a combination of everything for me.
Yeah, I'd follow up on that. It's kind of both, because I started with no mentorship, and I tried to do it all by myself and didn't really work out too great. And I got mentorship and still didn't work out too great. But it wasn't until kind of I combined the two that it worked. And, Alex mentioned earlier that, I coach track and field, and it's very similar to how we train our athletes, where it's one of those deals where it's like, okay, well, if someone runs with bad form, No matter how much they practice, they're practicing doing the wrong thing, so they're not going to get better. However, when you have someone to tell you how to do it correctly, and it could be coaching, it could be, podcasts, and I've listened to a few Alex's podcasts, spreading the right message. He's like, yeah, plug me. And it sounds like you have the right mindset about trading. So it's like, now once you have the right mindset and kind of the idea of what you need to work on, now that practice will be beneficial because now you're practicing the correct things. And I know something for me, I'm mainly a swing trader. So I'll hold positions for usually, anywhere from hours to days, maybe like a week at max for the majority of my trading. When I started coaching, I started doing a lot more work on the lower time frames. Even when I was swing trading, I did a lot more work on the lower time frame just because I was bored. There was nothing to do. And so I went down there just to kind of play around. And obviously the markets move from a technical perspective. They move the same way on every time frame, obviously just faster on the lower ones. And what I did was when I was working on the lower time frames, I just started seeing the same patterns over and over and over again. So maybe on like a daily chart, I may see something once a month. On a 5-minute chart, I may see it 3 times in the same day. And it just helped my recognition skills see it over and over and over again and kind of recognize, okay, if this happens, then this is likely to happen. Or, oh, what's this look like? Take notes of it. Oh, it happened again. Maybe this is something. And just, learning and learning and learning and then taking that to the higher time frames where I actually trade. So yeah, I'd say a combination of both. It's learning to do things the right way, having the right mindset. That's the biggest thing. And then practicing it. But that mindset comes first because I've been having a conversation with a trader on Facebook lately who just he just wants the answers, but his mindset is just the worst and he refuses to change it. And it's just like he's never going to be profitable until that happens.
Thank you so much for being part of the show, man. I really enjoyed having you on. Akil, thank you a lot for being here as well, my man, and giving us your perspective on things because your experience is gold to me. And if you haven't listened to Akil's podcast, awesome podcast. I actually listen to it like every day. And so it's called the Trading Coach Podcast. And other than that, man, Akil, thank you for being here. And Noah, thank you for joining us and being an active listener. I really appreciate that.
Yeah, thank you.